Hi, this is Paul from globaltradingsoftware.com, and this is a day trading tutorial, but using Elliott Wave. We're going to be tracking and measuring that mid-session pullback, if you like. So when we've had a large impulse move up, we can measure that, and I'm using the Elliott Wave Indicator suite for the TradingView platform. It's available for lots of other platforms on the links below, but we're really interested in this wave 4 pullback during the session because we want to measure the behavior of that, and if that meets the criteria using the tools with the Elliott Wave Indicator suite, we could look for a long to resume for the rest of the session. So we're trading with the trend after a pullback. Now on this chart, it's a 5-minute chart on ES. Now I'm using Heikin-Ashi here because I'm also been trading for those users that use our xBrat algo. That's how to get in a wave 3. You get the 5 and the 6 star buy signals down below, and you look for that long there. But I'm not really interested in that now. I'm interested in this mid-session pullback. So I may have taken profit on this first impulse leg, and right now I'm really interested in a run towards the end, in the last half of the session, and trading that long to resume that trend. So we have a couple of things on here. So the Elliott Wave Indicator suite, we can isolate that wave count at these lows. So it's just before the session opened today, about 20 minutes before the session opened, we got those lows. We've had a little bit of an ABC correction, nothing really exciting there, but we've had the wave 1, we've had a little wave 2 pullback, and then a wave 3. All this is done automatically by the software, and now we're more interested in this wave 4 and getting very close for that sort of entry. We've got the false breakout stochastic on the bottom. There's no false breakouts there at the moment. If I just look left, you'll see some yellow dots on the bottom there. But right now we're just interested in looking at the behavior of this wave 4 pullback. So I do also have as an extra another indicator we've got is the BIAS Depth Heatmap, and this will come into effect when we're really looking for to confirmation for those entries. So right now we've had the wave 4 pullback. It's pulled back and found support in the red zone of this automated probability pullback zone. So that represents a 70%. The red is 70, the yellow is 80, and then we've got an 85% in the green. If it finds support in there to go on and hit this automated 5th wave target zone there, in the middle of there is around about 414750. So we found support at the last chance saloon, which is good. The stochastics pulled back during the wave 4, you see, and crossed over in the oversold zone there. The Elliott Wave oscillators also pulled back, and we've crowned, and we're between 90 and 140%. So again, the behavior of this wave 4 is consistent with a continuation of that trend. So we're looking for the long. You can see now that the BIAS Depth Heatmap, this looks at 6 different time frames higher than what we're on right now, and all 5 out of 6 are green already. So we're pretty good for a long as well. So what I'm looking for really then is an entry strategy. So we've got to consider these previous pivots here at 412175. Okay, there's 2 attempts to break away from these lows that failed. So we want to make sure if we're going to go long above that. So 412275 is my entry long. My stop loss is 1 tick below that wave 4 low pivot. So that gives me a risk to reward of 1 to 1.6 to the lower end of that 5th wave target zone. So my risk to reward is good. The wave 4 behavior is good because the Elliott Wave Indicator suite tells it's good. Red zone on the probability pullback zone. Stochastic has crossed over in the oversold zone, and then the Elliott Wave oscillator is good there. We're good for the entry for me because I've got 5 out of 6 higher time frames which are green on the BIAS Depth Heatmap. And again, I'll put the link in the bottom of the description for this. So I'm basically using the Elliott Wave Indicator suite to confirm the behavior of that mid-session pullback. and then looking for confirmation of that signal, if you like, to trade that fifth wave move with that BIAS Depth Heatmap. So just using two of our trading indicators to give us the signal, confirmation. And then I've gone for the sensible entry strategy. So we can use the 6-4 moving average high here. You see this here. So this is part of the Elliott Wave Indicator suite. This is what we would call a conservative entry. But I want to be even more conservative above this pivot here, because that's really important to me, to make sure it's on its way, away from this wave 4 support zone. So we've done that. All I've got to do now is put the a stop limit order on 4122.75, and we're good to go. That's my long entry. Stop loss is just below the wave 4 pivot. And again, I've got a 70% probability, because we found support in this red pullback zone, which is automatically printed on the chart for you, to make it very simple, that it's going to go on and hit that automated fifth wave target zone. So, we're looking at around about 4148 as that sort of target, but anything over 4146.25 is a good target to take that profit. How to manage this trade, that would be another video, and I would use what we call the xBrat manager to manage that trade. But right now I just wanted to go to show you that Elliott Wave's not just for swing trading. This is a day trading setup, one of those mid-session pullbacks that can be measured, and then measuring that behavior to see it behaves normally. We've got the red pullback zone, we've got the stochastic crossing over, we've got the Elliott Wave oscillator. Everything's got a tick in the box. We're moving away, and then that final confirmation from the xBrat BIAS Depth Heatmap says we're good. Let's go long 4122.75. So hopefully that helps. Quick video, but it's that simple. I've isolated at these lows, and then the Elliott Wave Indicator suite has done that automatically. Not every day do you get a measured pullback like this, but when you do, you've got to take advantage.